Is this a real growth scare over rising COVID cases in Europe and potentially the U.S.?
Well, it is a manifesting in a growth scare because what you have is the threat of a renewed shutdown. And so in terms of market reaction and market pricing, that's manifesting itself in kind of the growth off scenarios. That's clearly, I think, the story of today, amongst a couple of other headlines. But yes, that's what we're seeing in the markets.
Trying to figure out whether it's brief and it's sort of a corrective process after this tremendous run-up we've had for stocks, basically straight line since March, or the start of something bigger and more pronounced concerns like we had in March over rolling shutdowns and uncertainty over a virus path. What do you think?
Well, I think we're dealing with a lot of negative headlines after an environment where the market has had a tremendous run up. I think it's important that you've had a major shift in policy understanding of how to balance the needs of health and safety concerns with the needs of the economy. And that dramatically lowers the risk of the kinds of broad-based economic shutdowns that were so damaging that we saw in March. So I think we're seeing a pullback here. I think it's coming off of an extended period of a run-up. But certainly I think the bigger fears that this would replay in terms of that kind of broad-based shutdown with those kinds of economic impacts is going to be overstated. And that's not to say that the slowdown and the impact may be from targeted shutdowns priced into the market. But I think the bigger fears of returning to the depths of what we saw in March are probably overstated.
So would you suggest buying some of the cyclicals that are suffering so much today, whether that's the banks here in the US or broad indices in Europe, which have suffered a lot today based on some of those fears that you're suggesting might not materialize of full shutdowns, and of course suffered year to date anyway?
Well, that's a really short-term tactical kind of question in terms of, do you buy the dip today? It's not really the way in which we invest. It's very hard to know, is one day's move the buying opportunity or 2 days move? I think it's more important to take a broader perspective in terms of the relative risks around COVID uncertainty, and what kind of balance one has in their portfolio. And rather than trying to time the market and time COVID headlines, which we think is very hard to do, you're going to have a better long-run investment outlook if you look for sources of balance in your portfolio, that you have sources of areas of investments that can participate in the upside, like we saw in September and in good markets. And then you have areas of the portfolio that can provide some balance and some defense when you have days like today. And it gets you away from having to predict and answer the question that you just asked me, which is, do you buy the dip here? Very hard to predict that.